Apologies for the poor audio quality in this video. I'm not really sure why that happened. I've messed with my settings and it should be fixed for next video. Hey, my name is Tucker Krause and welcome back to my channel, and in today's video we're going to be taking a look at Tronox holdings. Now, I began looking at them last week and they've risen several dollars since, so let's see if they still look good. They trade with the ticker TROX on the New York Stock Exchange at $20.63 per share. They have a market cap of $3.176 billion, a pretty low PE of 11.4, and a pretty decent dividend of 2.68%. Now, on the stock, there's definitely some things that need to be covered before you go into it further, and that's just the history, because it's a little bit messy for Tronox. So, Tronox was spun off of Karud Corporation, going public in 2005, and independent by March 2006. This was due to massive amounts of environmental dumping of toxic waste by Karud. Now, Karud was able to remove all the liability of environmental damage by offloading it on Tronox, while they keep all the great oil deposits and cash. This left Tronox with nothing but liabilities and debt, so they went bankrupt by 2009. And they were able to emerge from bankruptcy by early 2011. Since then, they sued Karud's purchaser as they were purchased by another company alongside the US government. This allowed Tronox to escape some of the liability for environmental damage, but not all, and they started acquiring titanium operations in 2012 and started to kind of become the company they are today around this time. So let's get into the chart here. So we can see this is a 2-year chart, very long term. We can see just last week they pretty much bounced off the very long-term support we have here, and that's why I first started getting interested in them, along with just some other people telling me about it. And it looks like they've bounced right off, though they're still a good bit below the 50-day moving average, with RSI kind of just being in the middle, nothing crazy going on here. So when we take it out to an all chart here, we can actually see this support line extends a good bit back. We can see bounced off of it right recently, and then they just barely held on here, as well as bounced off here and here. Alright, so let's go over some slides from their presentation. Tronox, a focused titanium industry leader. So they are very diversified when it comes to their operations, as we can see in the bottom right here, as well as by their sales by region. Though their product diversity isn't quite as great, with 79% of their sales being titanium dioxide. And they have 85% of their feedstock coming from their own mines. That's good to see. Good lot of vertical integration there, as we said earlier. And then for their titanium dioxide, most of it is paints and coatings. Alright, so on the right side here, is the main thing I'm interested in, and that is going over some of the price of titanium dioxide. I couldn't really find any proper titanium price charts or even anything online, so this is good to at least get some amount of it, which is that 2021 pricing is still a third below its peak pricing in 2012, so that shows we're not in crazy bubble territory most likely with titanium's price, which is sort of what happened with things like iron ore and lumber. And the left side here, just to quickly read through it, what they want to keep doing is use their advanced cost structure and vertical integration to remain competitive in the market, and commercial approach and margin stabilization as key components of their long-term strategy. And so the titanium dioxide market has basically been hand in hand with GDP through time, though of course that does mean if, we see GDP collapse, well, there's a good chance titanium's demand will also collapse, and so that's of course not great. Though of course we could see demand actually pick up more, with things like aerospace being very high demand areas of titanium, and of course aerospace being rapidly growing. Alright, looking at Tronox's 2022 outlook, they actually expect their free cash flow to go down, though they do expect their EPS and EBITDA to increase by a good amount, though that's largely because they expect to ramp up their capital expenditures significantly. I won't be diving into as much what specifically they are, but they detail throughout their presentation all the type of things they plan to expand and spend capex on next year, or throughout this year. And of course, this is not a ceiling for their potential, just 2022. So going over their 10-year revenue, or basically all of their revenue since they came out of bankruptcy, we can see it was relatively flat from 2012 through 2015, with it collapsing down in 2016, though since 2016 they've been climbing quite rapidly, so overall they've grown it by 7.7% per year across the 10 years. Net income is certainly a little bit more messy. They've only had 3 profitable years, so that's of course not a great sign, though of course we saw earlier they expect their EPS and things like that to increase for 2022, so hopefully we see it jump from here back up to say 2020 or higher levels. And of course, hopefully we can avoid any more negative net income in the future. So going just through some management numbers, ROIC is pretty decent. It's substantially above 2%, though not quite above the weighted average cost of capital, so it's just fairly okay. Return on equity is pretty much the exact S&P 500 average, so once again, just fairly okay. And debt to earnings ratio is also not great. It is very leveraged, though of course most commodity companies are, and so I'm not too mad about this. Overall, everything here seems to be just okay. Now, something to note, I just did this for fun. This actually means nothing. Pretty much ignore these values here, but going past the 4 years, they've doubled their free cash flow every year, and this DCF I threw together here assumes they'll continue to do that, though that's unrealistic. And again, in their presentation, they expect their free cash flow to actually go down, so of course this doesn't mean anything. So for this one is going to be a little bit more realistic. They've grown their revenue at 7.7% over the past decade, so this will use a free cash flow growth rate of 7.7%. going out into the next couple of years into the future. Now, of course, in their presentation, they did say that they expect their free cash flow to actually fall in 2022, but that's because of significant capex, and they'll be increasing their earnings in other ways. So I think this is still pretty reasonable. So using their weighted average cost of capital, we see a 10% upside, 67% upside with 8%, and, I just realized, no, I have these mixed up, sorry. Let me just quickly go fix that. Alright, sorry about that, let's fix now, sorry. It'll be $22.73 as their fair value using their weighted average cost of capital with 10% upside at 8% because as the discount rate gets lower and lower, their fair value gets higher and higher, 156% upsided with an 8%, and at 10%, that's going to be a 67% upside. So overall, it does look pretty good here for them now that I fixed this, of course. But of course, this is for entertainment purposes only. I recommend you do all your own research, all that good stuff. I hope you enjoyed this video. Thanks for watching, and I'll see you next time.